do like starting off every show with kind of a summary of what we saw happening in the market this week. And I've got a kind of a different chart here. Let's move that Chiron out of the way because I want to talk about like something that's under it there just for a second. Okay, so this chart goes way back. This is weekly data, and we can see kind of 94, or three sticking out. I'm really looking at 1995 because when I look at, that's a pretty incredible pattern.
Yep.
I mean, it's by the week, so it's a little less jagged, right? A little smoother, but that's a super smooth year. I mean, that was pretty much straight up. And I remember 1995 very specifically, and we keep getting kind of correlations to that year. Number of, the ratio of up days to down days is the same as 95, and et cetera. And I remember 95 very specifically, and it kind of does remind me of what's happening here. And there's a subject matter that seems to be similar too. So that was the .com, hey, here's the internet and what it's going to do and the excitement around it. And here we have this artificial intelligence, and obviously we don't really know the full impact of what that's going to do, just like we didn't in 95 know the full impact of the internet. I mean, we're here on this show because of what happened in that time frame, and able to broadcast on a channel like this. And the other thing that's similar to me is that in that time frame in '95, it was much more kind of a reasonable run because it was companies that had good earnings and bigger companies and had great sales and a product out there, and kind of a lot of the backbone of the internet pieces were moving, the Ciscos and Suns and such as that. We're seeing that same thing now, in my opinion, with these, kind of bigger companies, NVIDIA and Microsoft, and, companies that might have now. Again, if you keep going past 95 and you look at what happened there, by the end, the market was still moving pretty nicely, but a lot of crazy stocks were coming out.
Yeah, you can kind of think about it like a gold rush where the general stores are making the money early on.
Yep.
And you're waiting for, the miners to strike it rich, which are kind of like the smaller companies. So you're going to have some that strike out and some that actually do hit the mother load.
Yeah, exactly. I mean, it almost becomes sort of a frenzy, right? And I always tell the story about bingo.com. One of my clients that called me during that probably 99, 98 timeframe, and it was up, I think, like 800%. And they didn't even have a product. That they disappeared, shortly thereafter, actually, because they weren't allowed to do bingo online. Never got that approval. But that's the type of thing that I wouldn't be surprised to see happen again here with this artificial intelligence thing. Probably more like 2 to 4 years from now, before that happens. Takes time for this to take place. And I'm not saying this is going to happen, but when I look at the pattern for what we're dealing with here, since the end of October to now, it's pretty similar. Right? I mean, it's kind of smooth. It's pretty straight up. Again, we're seeing a lot of correlations here that are kind of fascinating. And so, however, you do have to understand, kind of how you work through these time frames, because, that .com bubble burst in the end, and we had a 45% drop, those types of things. So knowing, when you start to see that mania, that you've got to, be a little bit more careful. I mean, we have a system of rotation within our, universe list. And when things start to fall apart, the things that are still working will be moving up to the top of that list, and we can rotate into those, including the possibility of even being in T-bills and those types of things. We actually were pretty much out of the market in 2001 during that a big chunk of that downturn that happened for the same purpose, just kind of on a rotational basis. So one of the things that was really kind of important this week, I'd almost want to call this inflation week because we had some, most of the motion is around inflation. So when we look here on Tuesday, the consumer price index was reported. And again, there's two pieces to all these reportings. Technically, there's like four because I got year over year and month over month. And then we got top line, which includes everything, and then core, where they take out food and energy, right? But I'm going to focus just on year over year here and core, right? And not the top line, because core is more of what the Fed will look at. So you can see this pattern's not terrible. It's not dropping substantially.
Yeah, it has bumps along the way down.
Yeah. So it says it's down. It's year over year. It's 3.87% for this basket, and the market was expecting better.
Yeah.
And so the market dropped 1.6% on Tuesday. And now I thought it was kind of fascinating because now we have the federal governors coming out kind of in support of the market, which is really fascinating. You got to pay attention to what they're saying to a certain degree because I feel like it's not scripted per se, but they have a strategy. And so if they're talking negative about the markets because they want it to come down because they want inflation to come down, right?
Hmm.
If they start talking positive about the market, which they've been doing more of, my feel is that they're feeling like, hey, we want the market to try to support a situation where we don't end up in deflation,
Yeah, that's a bigger fear.
right? Well, I'm not sure it is, but if you listen to their words, it's a bigger fear altogether, yes. But I think it might be one of their fears right now, too. I
Hmm.
mean, because just listening. So, for example, one of the Fed governors came out really on Wednesday morning and said, "Hey, look, the CPI is not the measure that we look at that much. The 2% target that we talk about is on PCE, and he says they're significantly different. But interestingly enough, the market doesn't seem to know that based on that 1.6% drop. Uh,
I,
but go
I
ahead.
think because the CPI comes out so much earlier, it
Yeah.
gives people react much more to it. Though PCE comes out later, people kind of have expectation based on CPI and what's come out already for the month of January.
Yeah, that's true. It's and the market recovered in 2 days,
Yeah.
right? Because look at that pattern. I mean, I thought it was kind of oversold on the downside that day. However, when the market gets running like it has been, it gets stretched out. You're much more susceptible to those pullbacks on a short-term basis. Just because the market, people take profits, which makes sense. And then gets down low enough, and you get your dip buyers coming in. So we ended up with a nice run back up and came up. Yesterday we closed at a new all-time high, and gained everything back. So down Tuesday, back up Wednesday, Thursday. I think we had something similar to that the last time CPI was reported. Also, again, there's some expectations that the inflation would be dropping faster, and it hasn't here. Today's report was the producers price index, and the market, I don't know where it is right now, but it was kind of sitting around zero, just
It's,
before the
it's down a quarter right now.
down a quarter. Okay. And this is the wholesale price index, right? And you can see it actually went up. It's up to 1.95%, and that was not expected.
Hmm.
And so a lot of times the market is responding to what is expected because it's already baked in what's expected, and if there's an adjustment to that, it adjusts itself. However, when I look at this chart, first of all, it's up, but last month it was at 1.72%, which is pretty darn low, honestly. So to see it come back up and hover around 2%, again, this is a lot to me like the stock market. You look at it sometime, you're like, okay, the market's coming down. Is this just a temporary thing, or
Yeah.
is this like a big downturn that's going to continue? I think that's the same thing here with inflation. We see some little pops up once in a while. Is this, and actually, if you look closely at that, it popped up before, last year also, but and then it came back down. So, what's the overall trend and what's the momentum? You got to look at that chart. You got to say the overall trend's still down.
Yeah, and this report was interesting because goods was actually decreasing when you took the with, and then you had services which was 0.06% month over month
Yeah.
versus goods which was negative 0.2% month over month,
Yeah.
and so you can kind of see that divergence of service versus goods.
Yeah, and that's been an ongoing thing. It was just the opposite, right, during the heart of the pandemic because we couldn't use the services, so
Hmm.
we were going crazy on buying goods. Got all kinds of ships out in the port and Long Beach and LA and whatnot, and that's now mitigated, and we're out doing things, and it's look at the amount of people traveling and what have you. I have some clients that are talking about doing some revenge traveling this year, doing some big trips. So one thing that happened also on Wednesday, the federal governor that was talking said that it would be completely consistent within their desires to get inflation back down to have a few months that were up. He says that's very much what they kind of expect to have happen as far as that goes. So let's look at again. This is the core PCE,
Hmm.
right? This is what this Fed governor is talking about. It's what Chairman Powell talks about when he gets asked questions after their meetings. He's talking about PCE and he's talking about core PCE. And this is at 2.93%. They want to get this down to 2, right? And again, we talked about this before, but I still think it's worth repeating. If you take the last 6 months and annualize that out, we're at 2%. If
Yep.
you take the last 3 months and annualize that at, we're actually at 1.5%. And that's why I think this is where they're seeing the deflationary, hey, that's lower than we want,
Hmm.
right? And that's why I think we're starting to see some comments. Now we're still hearing comments like today from Bostic about, hey, it might be up, the rates might be up a lot longer than you think,
Yeah.
right? And I actually talked about this week. I wouldn't be surprised to see rates stay the same all year, or if they do come down, it'll be fairly late. Um, and the market is now, it had baked in a cut in March, and that's gone.
Yeah.
It had baked in a cut in May, that's now gone.
Yeah. It's all June's the first time
Now
where they actually.
June is the next, so it just keeps going because the numbers that are coming out are showing a decent economy. Now we did see this week some softening retail sales, which ironically is a good thing in an environment where everybody's worried about inflation,
Hmm.
and so we'll see how that plays out, and we are also seeing internationally, countries that are ending up, Japan is now in an official recession. China has been having problems. China's having deflation, and stock market issues and what have you that are happening there. So you kind of wonder, there's another country in there. I can't remember which one. One of the European countries that also announced they have a recession that started, you know, uh, just last this week that came out in the news. But can we avoid all of that? Can the U.S. continue to have growth with one country after another starting to experience some slowdown? So um, I think we probably can actually. If you look at, especially in the Europe zone and even in Japan, their growth is pretty minuscule.
Yeah.
Yeah, and so to slide into recession where you have negative growth is a lot easier for those countries. When you're only growing at 1% gross domestic product, I'm making that up, but it's easier to get down to negative than our 6 months, was right around 4% for the last half of last year, and all those things. So we're a little bit of a different animal as far as that goes. So anyway, I think this has been a very fascinating week to kind of focus on what I consider the number one issue still. Even last year at this time, we were talking about it and saying, hey, it's not recession, it's the potential for increased inflation that probably is the biggest issue. Um, I think if they keep rates up, for the year, they're going to be doing that, hopefully, because things are going okay.
Yeah. As
Yeah.
long as the economy is still growing and the job market softens only a little bit, they're going to keep rates the same.
Yeah. I, as a market participant, the thing that concerns me is that they kept rates down too long at the same basic Fed governor board, and caused that big jump in this inflation, or didn't get ahead of it. Maybe didn't cause it, but it came in late.
Hmm.
I think even they'll admit that at this point. And so then you wonder, hey, are they going to do the same thing on the other side? Because basically, it seems like this Fed board gets on a roll going one direction, whatever that is, and keeps going for too long. And so, are they going to do it again, right? And are they going to? Because they can theoretically start to cut rates really fast, but it takes time for those cuts to have impact. And if the economy's falling apart, or if we're in a deflationary environment, and I do think that's one of the bigger concerns, and I happen to share that concern. I wouldn't be surprised to see the Fed kind of outdo themselves here, but I'm not sure that keeping the rates where they are for the remainder of this year is really what I'm talking about. It'd probably be more of what would happen in 2025. They keep it up for years and years, and things really get soft. But I don't know. We'll see what happens. But anyway, that's our summary for the week, for kind of what we saw happening in the market. Still a good week, another up week, I believe, and so that's all happening kind of like 95. So keep our fingers crossed, and we'll see how this goes. All right.